Okay. I'm still a bit ill, so excuse the coughing. So, I'm making this video. It's payout progress. I'm now 4 out of 5 days onto getting a max payout from Alpha Futures on a 50k zero account, which is 1.5 thousand USD, which is roughly £1,100, a month and a half into trading futures. I wanted to direct some focus onto this. This is my Discord where I tracked my own stuff. Notice there's not a lot of stuff in it. I literally did this yesterday or the day before. So this is the trade I'm going to go over. As you can see, 1 to 10R. I've never traded a 1 to 10R on futures. I know plenty of people that have done 1 to 20, 1 to 30. This is a personal achievement for me, hitting a 1 to 10. You know, it's a big milestone. I take little wins everywhere when I can with trading to keep me motivated, even more than I am. So I'm going to be going over exactly how I got to executing this trade, strategy behind it, thoughts behind it, and execution. Okay. This was during pre-market of NY, and I'm just going to show you guys where I even started. You can unfortunately see these arrows. When you trade using something like Tradeovate, or I'm not actually familiar with any other like platforms, but it marks on your chart when you're on a live account. Every position, every exit. So I took two losers. Like 2 minutes before. Okay. I was kind of rushing it. I just hopped on the laptop. You know, I was like, oh, I'm going to miss the move. I'm going to miss the move. Rookie mistakes. You are never going to miss the move. There is maybe at a minimum 3 to 5 good moves you could catch in every day of trading. Do not be the guy that rushes on and loses like me today. So I got myself into $250 of drawdown through absolute nonsense trading. I don't know what I was doing. Don't ask me. I don't know. I don't know what I was doing. I really don't. How can I make this full screen? Here we go. All right. How did I get on to actually executing this trade? So, start on the 1 hour. Okay. Ever since that tweet from Trump, we've been ranging inside this initial pump. Okay. How do I feel about trading in a range? I don't mind it. I'm one of those people that does not really care where we are. If my setup plays out and my strategies are looking clean to execute on, I'm going to execute. You know, some people don't trade if they're in a range or they're like, I'm not going to trade today. I'm not like that. If it's clean, it's clean. If there's volume and good price action, whether you're in a range or no range and just free falling or just buying up constantly, you're going to catch W's. I'm not afraid of that. So on the hourly, I noticed, okay, we had essentially this breaker structure to the downside on the hourly, okay? Now, to me, that doesn't mean, it means a little bit. Does it mean we want to keep pushing lower? Well, with context, we keep rejecting a certain area. If we look to our left, what is at that certain area? It is an order block. This order block's been mitigated, including my trade, 1, 2, 3, 4 times. Okay? Mitigations, to me, is just the build-up of liquidity to execute a good trade with a solid sweep. Okay? That's how I use it. Mitigations to me do not invalidate a zone. So I saw order block, big push down, actual break of structure, second break of structure, come up, candle body, huge rejection. I could have even taken the thought of, all right, this rejection wick, I can look for entries off that. And if I did, depending on the timing, 1 o'clock, no, I wouldn't have. It still would have played out if I got my time of days right. But I'm just showing you what I did precisely. I also marked out this bullish order block, okay, which also got tapped and respected. As you can see, there was a good push up. Not great, but this is on the hourly. So on the 1 to 5 to 15 second and the minutes, that's going to be a great, you can catch that easily. And inside it again, I'm stressing this liquidity. You've got 1 tap, 2 taps, one, not even necessarily taps, just liquidity inside for us to sweep and have a good push up. Well, 3 actually. Well, yeah, 3. So I go on the higher time frame. I mark my zones. Then I drop down to the 15-minute. just to get a better idea of structure, mark out what highs I want to take out. Okay, is this high relevant to me now? No. Why is it not relevant? It has been taken out. Okay, it's no longer a liquid high I am interested in. What high hasn't been taken out? This one. Huge rejection behind it as well. This high's not been taken out. Okay, and it never did get taken out. So this is why I was slightly wary of this trade. I was thinking, do I feel comfortable trading knowing there is a high still in this zone, knowing it could kind of sweep up and then push down? Hold on, I was not being completely honest. I just remembered my point of interest was a 15-minute fair value gap, sorry, not the 1 hour order block. Both valid, both gave me the same information, did equally as good of a thing for me, telling me I'm going bearish, doesn't matter. 15-minute fair value gap, 1 hour order block, all the same thinking, but I just remembered it was a 15-minute FVG. So I was a bit wary of that, okay? But we did sweep this high on the 15-minute. So I thought, all right, this high never tapped into the fair value gap, but we did sweep it. Is that enough liquidity for me to then, in my head, justify a good trade, good push down? When you're trading entries on the 15-second, 30-second, 1 minute, yes, even the retracement of taking a high can provide you a full setup. Okay, it doesn't have to be the be-all or end-all of the day. Look, push down, that's a lot. But then ultimately came back up, but guess what? My trade's in between here, and I know that arrow's there, but if you actually look when does it show you when I click it? No, if I have to go to the lower time frame for that. It was actually to like here, okay? So even just that retracement of taking a high is enough of a trade when you're trading on the seconds. So we took this high, okay? And then I dropped down to the 1 minute. Now I mentioned previously about how I was weary of that big wick that we didn't take, okay? What do I do when I'm weary? I need confirmation, okay? Look, as you can see, swept that high. Took 1, 2, 3 highs for our liquidity, our fuel. Okay, drop down to the 15-second. What we see on the 15 seconds is a much clearer picture of what I'm trying to demonstrate here. Maybe even the 10-second actually, in terms of confirmation structure. I'm sorry, TradingView always sends me like a million years into the future. Eventually we'll get there, don't worry. Okay. So, okay, well, clearly that does not make me look good. The FVG, I did draw it wrong. It got to like there. I think if I can improve on the Discord. Yeah, we just barely wicked those two in. All right, so the FVG, we tapped it just about. Okay, now I'm on the 10-second. Okay, I need confirmation that we're not just gonna come down, come up, come down, and then go take that bigger high and then sweep down. So what did I wait for? I like to call this 2 boss conf. It's when one breaker structure is simply not good enough. It's just half the puzzle. So we take this low, our change of character, and we take this low, our break of structure. I have 2 breaks of structure to confirm bearish. Then what do? I go to the 1 minute. Go to the 1 minute, and what do I see? I see an order block. Pull out the order block. Okay. And then now, you see, price did tap my order block. I'm going to show you exactly my thinking behind how to enter and why. So what do I do when price taps my order block? Okay. Maybe this is better showing the 1 minute actually. Oh, much cleaner on the 1 minute. All right. Okay. We've got our 2 breaks of structure. We've got our low time frame, I like to call it lower time frame point of interest. We have a higher time frame point of interest, fair value gap, for overall directional bias. Lower time frame point of interest to give us an entry off of, all right? It's like piecing together a puzzle. You've got directional bias. You've got points of interest, fair value gaps, order blocks, rejection blocks to confirm that and play off of. Once price plays off it, you wait for confirmation like changes of character, breaks the structure, and you see what they leave behind. They leave their own order blocks and own fair value gaps. Find what's the most valid. For me, this came up, wicked, rejected, formed this order block. Okay. Now price then had a leg of pushing down and we broke structure, which is good confirmation for an order block. Now what I wait for is, it says I entered on this candle. Yeah, sorry. What I wait for is essentially come down, come tap my order block, wick in, body close, okay, and then that next candle, okay, once that next candle gives me a rejection to like a similar level, then I enter. So candle comes up, highest the candle goes, where the candle closes. We rejected. You see that wick? That's a rejection to my order block. Okay, second candle comes up. As soon as it begins to reject, I enter. Okay, I need to see it push up, and I also need it to see start rejecting. I cannot just enter on a push up. Okay, yes, this candle rejected. Is that full confirmation of my trade? No. I need the second candle to show a similar behavior, because you know, this candle could have just kept going, just blown me out. I could have entered just out of panic and it would have just gone through. I needed to see it. Is this like, it doesn't want to go any higher. So then I press enter, I press sell. Okay. And then if I go on 10 seconds, I can tell you everything else that went into it. Oh my God, trading view row. Why'd you do this to a guy trying to teach? Give it a second. The laptop's been a bit slow today. Definitely need new Wi-Fi. Yeah. So that was my execution. One candle rejects. Second candle shows rejection behavior, entry. Now, how do I determine my stop loss, my take profit, and my break-even point? Break-even point for me is the first area of internal liquidity. This low here. As soon as we take this low, I go break-even. I managed to get in here beautifully right after rejection on the 15. Oh my God, does no one let me do it? Let me just pull it to scale. Second of all, now how high do I go? Today my friends asked me on the way to the gym, why didn't you put your stop loss at the top of the zone? Why was your stop loss in the middle? Okay, I'll tell you why. This line, this dot, you might see this dotted line on all my like grey zones. I call it the equilibrium, the midpoint. You can call it the consequent encroachment, the C. It's the same shit, the middle, 50-50. Just right down the middle, okay? Price often likes to respect this area, okay? So with that thought in mind, my candle entry, my wick, is below that equilibrium. But price tends to like to respect that point. So I'm conscious of the fact that price could re-sweep to the midpoint into this lower time frame order block, liquidate that original high just for a bit of extra fuel, and then push down. So what I did, I think I put it 1 or 2 points above the CE equilibrium, just in case it did decide to wick up, and then I'm still in. My stop loss was 6 points, yeah. So 6 point stop loss on the NAS to some people is absolutely ridiculous. If your strategy is playing out, you've got good risk management, why not? Why not? Just believe in yourself. So I keep in mind, I previously lost the last 2 trades. Okay, I'm down 200, 300 on the day. I'm down at 300. Okay. At this point, I was risking 5 micros, so $10 a point. So at this point, I was like break even on the day. Is that what I want? No. So I thought, okay, what's like the bare minimum I can get to get a winning day, which is $200. So I targeted this right here. In my head, that was like, yeah, then I'll be safe into profit. I actually end up being 240 into profit, but this trade as a whole, 44 points times 10, this would have been a $442.50 a trade, pretty much. Not pounds, dollars. I can't remember. This is the NAS. So my draw on liquidity today was just based on how can I get out as reasonably as possible and still secure a winning day. If that wasn't the case, and you're just someone watching at home saying, okay, I want to trade, how can I do it best? Okay, imagine like me, you didn't lose and you had all the points in the world to play with. You want a big win. What we've targeted here. Okay, 1 low, 2 low, 3 low, 4 low, accumulation of lows. Very good low resistance liquidity, just built up, easy target, and as you can see, absolutely smash through. Volume is there, price is hunting. Okay, Christ, send it to the moon. I took mine. Oh no, the arrow's saying I took it around here. I know I got out like here. You know, I'm a bit lazy with the button pressing. Oh my god, I've moved the thing. You know what? Screw this. No, I don't care how accurate I show this part. It's not really relevant to actual trade ideas. Anyway, so what we've got a trade. We've got our break-even point. Okay, I will mark that as BE. Okay, I don't do this in real life. I do it just for screenshots and showing you guys. I don't actually mark anything when I trade properly, just for screenshots. This, take profit. Okay, set your limits. Set your buy stop. Set your whatever to take you out of the trade. Okay, this accumulation. Okay, you see this? Bunch of little lows. Bunch of little lows. Actually, that does not count because it got taken out. Okay. Bunch of little lows resting right inside an imbalance. In the NASDAQ on the higher time frame, price likes to sweep out liquidity inside fair value gaps before reversing. As you can see, this is what our whole trade idea is based around. Fair value gap, 1 to 2 taps, that's our liquidity, sweep and then push down. So I was weary of this point. Once it takes it, could it reverse? So what I call this is trailed profit. Once price takes this point, I then am moving my like stop loss essentially to probably my, well, it should be more logical than just random, but you actually have to go on the higher time frame and look. So what do we have in my trade on the higher time frame? An order block, imbalance, imbalance. Okay. Since price moved quite aggressively towards my trail profit point, I don't expect it to come back up to this order block. I expect it to just keep pushing, maybe reject off the imbalance. So even I've gone from risk-free trading. If I lose, I don't lose. To now, if I lose, what is that? One fifth of my trade. I go from now securing like $100 in my loss. Okay, no biggie. Nice little buff to the account. So yeah, here I'm risk-free. Here I win if I lose. Luckily, unfortunately, if stuff goes your way, you get to here. Irrelevant. Still a super useful tool to mitigate losses unnecessarily. Okay, trailed profit is not as important as going break even. A lot of times I don't use trail profit. Once I'm break even, I just let my thing run, because there's been plenty of times I've used trail profit. I have maybe decided on the wrong area, or there was no area worth using, and price comes up within a few points of my break even and then flies down. If I trail profit, I'd be out. I would have never made that win. So trail profit is not as important on lower time frame trades. It's more important on higher time frame trades, in my opinion. You know, a trade that's maybe going to last you like 30 minutes, an hour, have a trail profit, you know, de-stress a little bit. Make it so, since you're probably in that high time frame of trade, make it so even though you lose, maybe you've got 2 winning days worth of like trail profit buffer. You lose, you've got $400. You won on the day, and you've got a buffer next day in case you lose. So yeah, that is that. I will show you again in the Discord. Full reload. Come on now. Come on. All right, here we go. So, the trade I showed you earlier, okay? Everything's there. 1 to 10. It was like a 1 to 9, actually. My stop loss, I marked it down as 4.75, so I probably didn't list it properly on the stream. Rating, to me, this was A+. Winning day, this is my 4th out of 5 required winning days. My account balance after the trade, $53,823. I'm well above the limit. Well above the limit for a payout, and I'm a healthy £323 above balance, have a max payout. Point of interest, higher time frame fair value gap. My confluence, a higher time frame sweep inside the point of interest. Low time frame entry, 1 minute order block. Entry model, 1 minute rejection to OB. So everything I've said, I've just backed up with pre-written writing. You can see I wrote it at the timestamps 12:29 p.m. So I wrote this nine and a half hours ago. Okay, that is that. That is how I trade. Because my account's on such a healthy balance, and I'm just securing winning days, I'm not going for crazy trades. I am securing $250 to $350 a day, basically earning my max payout and then getting my max payout. That is the aim. Okay, once you have a live account and you can get a payout, go get that payout, enjoy your money, go show yourself it's real, have fun with it. Okay, you know, the more tangible the more real you make this for yourself, the more motivated, the more you understand this could be me. Okay, next time you hop on charts, realize 52,500 is the minimum balance to take a payout. Take half, so you're left with 51,250. Okay, you now need only 1,000. No, you only need 1,250 to get another payout across 5 winning days. That's $250 a day. Why risk $200-300 a day a trade and pull your hair out and go crazy when you lose? No need. Once you get that first payout, it gets a lot easier. Trust me. I mean, I wouldn't know. My payout got denied, but this next one's not going to get denied. But I'm just, from someone who had enough to get a payout, who didn't because I traded silly near a news event. That was done with me. I understand once you're above that 52.5, above that 51, 50, 51.5, it's very easy to build slowly and not as stressfully. You know, I'm risking $100 a trade and I lose a trade, okay? $100 is nothing. It's nothing. Who cares? Okay, so once you get your first payout or you get the account to a nice balance, you know, it's a lot less stressful. I honestly found evals more stressful than my live account. I hate evals. I am an eval hater. I despise them. I am not looking forward to trading evals again to up my portfolio. I really just want to use CPI, but a part of me also knows can't just rely on news events. They're super unreliable. I actually blew a eval trying to trade last month's CPI or this month's CPI. Yeah, that wasn't fun. Anyway, now that we've got what I did today, let's go to what else you could have done today. Just to prove my entry model bloody works. Instill some more confidence. So it's not, you know, it's not rocket science. Right now I'm looking to my right and clearly price has reacted to a zone. I'm hoping it's as simple as just this order block. Does it go above that? It does not. So we've got a nice order block on the 1 minute. Okay. Why is this valid? We've left the higher time frame point of interest. We've shown a good reaction to it. We do not want to come back up to that area. We then, that order block has caused a break of structure. A change of character, more like. Okay, and then it's done the classic inducement towards itself. Lower low, lower high, higher low, higher high, higher low, higher high, higher low. You know, it's failing to break below. This is not a bad sign. It's literally just engineering this internal liquidity. So what do I mean by that? When price is pushed up, okay, we want liquidity in that little bloody island in between to get taken, to fuel us. So we've got liquidity. We've got some highs. So Price takes that liquidity. What do we get left with? Well, I don't actually even need to look for a 1 minute point of interest. We're already on the 1 minute time frame. So I'm just going to use exactly my entry model. 1 to 2 minute point of interest, 30-second point of interest. We've come up. Okay, we've wicked. Next candle. It's come up. As far as it's gone. Low as it's gone. Where it closed. Next candle. Came up, 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 up. Rejected hard. 1, 2. That's 3 rejections. I would have entered there. Okay, I know I just said 1, 2, 3 rejections. I don't enter based on a rejection amount, just if it rejects in the fashion I want it to. Why am I going to put my stop loss at the high of this order block when I didn't do it at the high of that order block? Great question. Because I mentioned this midline earlier, the equilibrium. The equilibrium is irrelevant if it's been blown through. On my previous trade, the candles wicked here. This trade, the candles came above, took the equilibrium. Came down, reswept, went well high within the order block, showed a huge rejection. I would enter on the close of that rejection. Like, not necessarily. Yeah. Once it kind of goes below this body, this wick, then I'd enter. Because I'm expecting to go further. Let's say I wasn't such a scaredy cat and I was trading as someone who wants to make a few thousand, as I should be. I would target that low. Okay, why would I target that low? Not because it's a beautiful 1 to 13. I don't care about the numbers, I care about results. Because if our trade ideas are valid, if my thinking's right, if my confidence is right, if my strategy is panning out how it should be, which data-backed strategies do pan out every day, multiple chances a day, then this low should get taken. Okay? Better change of character. Area off to change of character. After the price reacts to a zone, it wants to then go break structure again. You know, bullish, bearish. Okay? Wants to keep pushing down. That would have been the, let me look at the timing as well. Yeah, beautiful. 1:30. So essentially at 1:30, the new 15-minute opened, created its wick, took all the liquidity, and then distributed until the new 15 opened, came up, wicked into this imbalance, and then kept pushing for the remainder of its candle. So, beautiful. What else do we have? 320. That's not too late to trade. I would most likely trade at 320. I don't really care. 320. I can already see what I would have taken, more or less. I think there's a bit of a cleaner picture on the 5 minute though. No, there's not a cleaner picture on the 5 minute. Jeez. Yeah, clean enough for me. Okay. Higher time frame zone. We need a good rejection, a leg up. Okay. We cannot just enter off that. I would never do that because I need to see it actually reject. Okay, it could just kept blowing through. What do we get left with? This fair value gap. Fair value gaps are great for continuations. Okay. Okay, now how would I enter this? I wouldn't. I actually wouldn't have entered this. Okay, I regret saying I would take this entry. I wouldn't. You see this? Chop. Chop City. Don't trade Chop City. Wait till price action clears up. Okay, yes, it's accumulating within my zone. Okay, accumulation really close to your point of entry. You know, I don't want to just get wicked out. So maybe I wouldn't have taken this, but you know, it doesn't look the worst. So we've come down. We've wicked. Okay. Why is it important to wait for that second candle? I'll show you precisely why. I'll show you exactly why. So you guys know I'm not just a fucking gimmick. Candle comes in. Wicks. Lowest it went. Highest it went. Highest it went. Where it closed. Second candle. Second candle does not touch the zone. Not crazy. That's fine. then, but doesn't create much of a, I don't know how to explain it. Doesn't create much of a wick in. Like I would prefer if it tapped the zone again, to be completely honest. To me, these lows, and it's good that it's good that we did wait, because look, what does that show you? Huge rejection to whatever's in this area. Probably going to keep pushing down, which eventually, after a lot of chop, we did. And then we got this beautiful rejection wick. Second candle, where it opened, lowest it went, I would enter here. Okay, because I'm waiting for candles to show me good comp. I rarely wait for them to fully close. Like after I see it go in and then go out a respectable amount, then I enter. So our initial rejection candle, wick in. Second candle, come wicks in. Entry after it goes past this first rejection's body. Break even point. Stop loss. Where's it going to go? Midpoint? No. The whole thing. Why? Because the midpoint's been invalidated. It's no longer relevant. Okay. So, what do? We're going to play it safe. We're going to just take a relative high. Okay. Let's see what it shows us on the seconds time frame. Maybe I can paint a clearer picture for you guys in case you still don't get it. Because to whoever's watching this video, I don't expect you to understand 100%. Do not feel like an idiot if you just don't get it. I'm explaining concepts the way it makes sense in my head based off how I've learned it. Okay, so I'm not against you guys if you don't understand. I'm constantly thinking, how can I best reiterate and explain myself on these complicated concepts, because this is complicated. Someone who's never done it before, this is horrible to try and understand, but I'm trying to make it as easy as I can. So basically, for the fair value gap, this ties into what I said earlier as well. Fair value gaps, resweeps. Okay, we tapped, people get happy, yeah. Institutions step in, bang, take you out. Huge liquidity, pump the move. Now, post entry, it was kind of chop city. I'll be real. It was chop city. I honestly, well, actually, I'm on the 10 seconds. So it wasn't as long as it looks. I would have liked it. It would be alright. But remember, I said every strategy lines up, right? Okay. What do we have here? I don't use them, but if you wanted to trade my strategy, you could alter it a little bit. Wait for price to wick in on the 1 minute, drop to the 10-15 second, wait for your inversion fair value gap, enter, SL at the low. Okay, every strategy, inverse fair value gaps, order blocks, wick theory, whatever you want to enter on, you enter on. It all ties together. I support you. Yeah, those are my 3 trades of the day that I think were absolutely banging. Today's price action was like sensational. Wish we had this every day. Okay. And actually, funnily enough, the least impressive of the 3 was the one I took. Why? Because I traded, I won, I locked myself out of Trade of 8, and I went to the gym. Okay, that's what you should do. After done trading on there, do not dwell on it and keep trying to take more positions and more positions. So, what else can I say about these? Okay, so for my strategy, everything has had a higher time frame point of interest, an abundance of liquidity, a semi-low time frame point of interest to take entries off. And again, rinse and repeat, high time frame point of interest, medium to low time frame point of entry. And then you wait for entry confirmation, target liquidity. Okay, we had liquidity, sweep, push. Liquidity, sweep, push. Did we have liquidity? Yeah, liquidity back here, sweep, push. Okay, don't target liquidity like an idiot. Do not go for like stupid, like unattainable trades. Like, I would have never in a million years put it up here. Like, why? Why would I put it up there? To me, that's a fairly protected high. That's what started this whole thing. I don't expect that to get taken out if my thinking's correct. So be reasonable with yourself. Be happy with 50, 100 point trades. Not everything's going to be a 200-300 point banger. Be fine with that. This is not get rich quick. We're slowly building and proving to ourselves we can trade under a winning system, keep our heads cool, and win day, week, month after month. That's what it's all about. I personally, after I get this payout, I'm gonna buy one or two more 50Ks from Alpha, add them to my portfolio, and hopefully I'll be trading 150K of capital. And this series might be shorter than I expected because this is road to 10K a month. And if I get 2 max payouts from Alpha with those 3 accounts, I'll be at 9K a month, which to me is, that's pretty much 10K a month. That's not good enough for you? All right, imagine I get 3 payouts in a month, one in 1 week, the other one in one and a half week, and the other 1.5 week. Then I'll be at what? 13.5, 14K. Translate it to GBP, that's easily easily a 10K a month. So, like, this series is all about me building myself. You've got to be selfish in this game, but I would consider myself on the very lower side of selfish traders. I love teaching. I have my own student. I don't charge him or nothing, because if you haven't actually yourself extracted money from the market, you should not be charging for your services, because you're trying to teach people how to take money out of the market and you haven't done it yet. Is that to say that I don't know what I'm talking about? No, not at all. This is like my 14th winning day. But until you have that physical payment in your account, which I should have had last week, you cannot morally justify charging someone. Even if my services are worth like 60, 50 quid an hour, who knows how much you want to price me at, even if it's worth that, I can't morally justify charging people, which is going to change in like 1 or 2 days. No, I'm just kidding. My student, if you're watching this, I'm never going to charge you, bro. Never. You're a passion project. But yeah, today was great. Not every day on NQ is going to be like this, but you play with what you're given. Price action's absolutely rubbish. 0 out of 10. Don't trade. Price action and volumes, I'll give this like a 7, 8. Trade. Go take that risk. Go take that trade. Be patient. Wait for everything to line up. Wait for liquidity to get swept. Wait for your confirmation. And you go for it. This is all about risk taking. You go for it. But yeah, 3 trades, 1 winner. Biggest win on NQ ever. I'm probably going to be able to request this payout, if not tomorrow, day after, or the start of next week. And I'll officially be, my first payout will be a max payout, which I think is really special. But, that certificate's going to stay with me for life. I might even get it framed. And I love the fact that my first one's going to be a max one. You've got to take the little wins in trading. You really have to. I'm excited about everything. Like, I'm so big on hyping yourself up in this game. I'm recording a whole video just because I banged the 1 to 10. I made like $300, and I made a whole video about it. It's also to show my strategy. I hope this lesson, this teaching was a bit clearer. I thoroughly enjoyed looking at the rest of today, seeing what I could have caught, but I didn't. But yeah, that was me. Enjoy.